Well, it's Wednesday, the 7th of August, and yesterday was an awesome day because the interest rates came down again, yahoo, and that means a hell of a lot to us who are in property. And let's talk about why that is the case with Cameron Kusher, who I have on the line on Skype with latest technology. So welcome, Cameron.
Thanks for having me, Anthony.
My pleasure. Now, Cameron, first of all, let's talk about the election. Kevin Rudd announced the election for the 7th of September, and then we'll roll into the interest rates. And I'd also like to cover what's happening globally, nationally, and then down into Adelaide, of course. So let's get underway, mate. What do you think of the election?
Well, yeah, a couple of weeks earlier than everyone thought. Obviously, we now get to go to the polls and choose who's going to be the Prime Minister to take us forward from here. As we know, business confidence has been pretty weak. Consumer confidence has been okay, but probably not as strong as you'd expect. And hopefully after the election, we get a stable government. We don't have a home parliament anymore. And we can get on with business confidence improving and consumer confidence improving because, as everyone will know, interest rates have been cut and they're at very low levels, and people should be getting a little bit more confident based on where the interest rates are.
Well, the interest rates dropping, as they've mentioned on radio a lot over the last 24 hours, is a double-edged sword. Essentially, one would argue that means the economy's in trouble. Others argue, but how good's that? The rates are coming down and that's good news. Where do you sit?
Well, I guess on a historic basis, you would say that interest rates this low obviously indicate that things are in trouble. And we saw last week that Treasury's come out and revised its estimates of the unemployment rate and GDP, saying the unemployment rate will hit 6.25% and GDP's going to be around 2.5%. But if you look on a global scale of the other developed countries, our interest rates are still quite a bit higher than that. I just think that times are a little bit different this time round, and we're going into a period where we're going to be seeing interest rates much lower than we've historically seen them, and we're already there. Obviously, for people that own homes and have to pay off a mortgage, it's great news. Obviously, our interest charges are a lot less. But for people that are savers, they're not getting a lot of return on their money sitting in the bank. That may actually start to see people move into the property market. Yeah. We're already seeing a lot of investor activity because they are hunting essentially for some sort of return because they're not getting that on cash or bonds or these safer assets, moving into slightly riskier assets such as equities or housing.
Now, Cameron, yesterday I had the stats. We've got a large rental portfolio for residential property, and our stats are around the 1% vacancy rate in the middle of winter. That is tight as a drum. So that's a really good sign to also be entering the market as investors because that augurs very well, particularly this time of the year, for rates to start to have some upward pressure.
Exactly.
Yeah, rental rates, that is.
Exactly. I mean, we haven't seen too much rental pressure in our data yet for Adelaide, but, not a lot of new construction going on. Obviously, as you said, very tight rental vacancy rate. Yields are slightly better than what you're getting across the typical capital city house and unit in Adelaide. And investors are obviously, with growth in values not particularly strong, going to be having to chase some level of rental return. So I think the investors that are coming into the market now are looking more so for yield than they have in the past, knowing that capital gains are probably not going to be as strong as they were, between 2000 and 2007.
Cameron, a quick fly around the globe. So, I know you've got a very big presence, RP Data and your parent company in the States. What's happening?
The housing market's really picking up. House prices are up about 12.5% over the last 12 months in the US, and obviously low interest rates there are starting to bite. We know that the share market's at record high levels. The economy's starting to grow again. So it looks like slowly things are starting to get back on track in the US, which is good because, as we know, the Chinese economy is still growing very strongly, but the rate of economic growth there has slowed over the last 6 or 9 months and may even slow a little bit further. So it's good to see that whilst that's happening, we're seeing a bit of a pickup in the US economy.
Now, the national market, just a really quick pricing.
Yeah, the national market's going quite well. If we look over the last 12 months, home values are up 4.9%, but it's not all capital cities. We're seeing particular strength in Sydney and Perth, then to a lesser degree Melbourne and Canberra, and then you've got the also-rans, which is Adelaide, Brisbane and Darwin.
Oh, thanks, mate.
Yeah, well, I'm in Brisbane. It's the same deal for me. So to date, we're not seeing a lot of capital gains in those markets, but they're certainly looking better positioned, and they do tend to lag what happens in Sydney and Melbourne historically. So maybe they'll be the next two markets to watch.
But let's face it, as an investor, you don't buy in the boom. To me, rates dropping yesterday, and with affordability getting down into the really exciting area where rents are almost covering the mortgage payments, and they'll start to overtake each other now. I would have thought that just says to me that's got real estate written all over it.
Yeah, it's a great opportunity. As you said, people have probably missed the boat somewhat in Perth and Sydney. And even Darwin, which is slowing now, has had a good run over the last few years. But we're seeing, obviously, Perth and Darwin are fairly heavily exposed to the mining and resources sector, and the slowdown in that area of the economy may impact on the housing markets in the Northern Territory and in WA. Sydney, I think that market's probably still got a bit longer to run. Obviously, not much growth in that market over the last 10 years. But what we're seeing at the moment, as the prices in markets like Melbourne and Sydney continue to grow, the gap between pricing in markets like Adelaide and Brisbane is really growing, and those markets will probably start to look a lot more appealing, not just on a rental return basis, but also the fact that they're significantly cheaper than those other major capital cities.
Now let's talk about South Australia. What can you tell me that's new news?
Well, our data's not showing much of a pickup in the South Australian market. Home values over the last year are up 1.1%. And as
Whoa, yo.
1.1, yeah, get really excited. But compared to Sydney and Perth, where we're seeing 6 and 8% growth, obviously nowhere near as strong as that. But most of the indicators are looking quite good. We're seeing the amount of stock available for sale falling. We're seeing the time on market and level of discounting improving. So vendors and buyers are getting matched much quicker than they were at the same time last year. And vendors are really starting to set more realistic prices from the outset, which really should help the sales process, given that people have to discount less, which means they should be able to get to the point of agreeing on a contract much quicker.
Very quickly, because we're running out of time, but the prognosis for spring this year, it's looking, the ducks are lining up for what I would consider, it appears to me like we're going to have a really full-on spring.
Yeah, well, I mean, in most cities, it's been unusually busy throughout the winter period. If we look at some of the larger auction markets in Sydney, we're seeing clearance rates up around 80% in the middle of winter, up around 75% in Melbourne throughout the middle of winter. So I think this year's spring's going to be a very good spring selling season right across the southern capitals like Adelaide, Melbourne and Sydney. And I see that the momentum that we're starting to see now being carried through right till about late November, early December.
All right, Cameron. Well, just very quickly, anecdotally here, as you've just mentioned, we've found particularly the last few weeks has been strong, remarkably strong, given it's pre-election. I'll just test my theory. Immediately post the election, I think we're going to have a really full-on period because there's built up, the pipeline's full of buyers who are ready to go. There's a whole lot of sellers that we've looked at but haven't yet put them on the market. Just could be a really exciting roller coaster ride, come late September.
Yeah, it's definitely going to be interesting, and I do think we're going to continue to see a pickup throughout the year. I guess the one concern from the Reserve Bank's perspective is they want to see more construction, which means more new homes being built. And at the moment, the response, there has been a bit of a pickup, but it's been a fairly muted response to new dwelling construction. So hopefully the lower interest rates that we've seen and potentially further cuts to interest rates will result in a bit of a pickup in new home building, because that's essentially what we need to see as the mining sector slows over the coming years.
Well, Cameron, as always, fantastic to see you. Nice to see you looking pretty casual and relaxed over there in Queensland. And we'll keep an eye on things here for you, and thanks very much for your help today.
No worries. Thanks, Anthony.
And that ends our market report.